Let's go to Sanjeev Keskar. Now, Sanjeev wants to know about the different taxes that are applicable when a registered society undergoes redevelopment. What are the tax implications if the members invest the entire amount of rent received from the developers in buying additional area that will be given during the redevelopment? Is there a way to save this tax? So basically, they're looking at investing the rent that they're given to buy more area in the new redeveloped building. Can they save on tax over here? What can they do?
So there is one more question before that as well, that he's asking that what are the taxes applicable when the property goes under development and when each of the society members signs an agreement. So I think there are 2-3 questions. If I were to take first question, that when a society member signs agreement with the developer, obviously one has to evaluate at that point of time what is the construct of that agreement and whether under that agreement any capital gains tax arises or not, and whether any stamp duty. These are the two major things one has to think about. At least prima facie it seems that capital gains tax should not apply because what the member is getting is a new constructed property against the existing property. Stamp duty, I think, will be governed by every state, but prima facie again stamp duty is likely to be applicable based on the rates prescribed, because the existing property is being given away and the new property is getting transferred. So these are the two important taxes. As regards rent, again, any compensation being paid by the developer, whether it is rent, whether it is brokerage, whatever form and shape, there are different considerations being paid. Each of this is an income in the hands of the member of the society, and generally it would be taxable as income from other sources, which is the residuary head of tax. But if such rent is used to actually pay rent, so a member actually goes out in the market and gets a property on rent, and he actually incurs the rent cost, then against this rent income, the member can offset the rent expense. And if there is a negative balance, obviously you don't pay any tax, but if there is any surplus left, then on the surplus, the member will have to pay tax. And same way for brokerage again. So net, any actual expenditure incurred for a corresponding income should be eligible for deduction, and to that extent tax can be saved.
Right. Also, the other question, now he wants to know that if they use the rental income that they're getting and they reinvest it into buying extra area that will be built during redevelopment, will they be taxed on that, and are there any deductions available on this?
Yeah, I intentionally tried to avoid, but answer is no, because it is rent income, and rent income can be offset against a rent expense. Any reinvestment of rent income for development will not be eligible for any exemption.
So technically it doesn't fall in the capital gain section which you're reinvesting into another home property.
Yeah, because see here he's not getting any consideration.
This is income. Exactly.
So if there is no capital gain consideration, then there is no offset against the cost of consideration. So
and one more quick question, Samir. There are other things like, a hardship allowance, a travel allowance. This typically happens when you have a city center property and you are forced to move to the suburbs because that is going into redevelopment. You are given a travel allowance, etc. Is this also taxed, and can that be, is there deduction that you can avail against it?
Yeah, any allowance, any compensation being paid by the developer under the redevelopment agreement is an income and will generally get taxed under income from other sources.
Okay, so net, the answer to your redevelopment question is this: there are income that you get under different heads. Yeah. Now, if you can offset that against similar expense of a similar nature, which means if you're getting travel allowance and you can offset it against travel, if you're getting rental income, you can offset it against rent that you're paying for another property, because you cannot obviously live in a building that's been torn down. In that case, you can save on taxes. However, if this is adding to your income and you're not really using it for the purpose that it has been prescribed for, you will have to pay tax on this. right?
Perfect.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.